This is Horizons Middle East and Africa, our top stories this morning. Fresh strikes, the U.S.-Iran conflict deepens with the 9th straight night of retaliatory attacks after 3 American service members were killed over the past 2 days. Brent crude topped $90 on the unrest, climbing to its highest level in more than a month. Asia's AI trades remain mixed as traders digest news out of Alibaba and Moonshot after their latest AI releases. And it's a big week for bank earnings in the Middle East. We'll discuss how geopolitical risk and oil prices are reshaping the outlook. It's just gone 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. We do have plenty to get to as far as the geopolitical developments in the Middle East, but let's just get you a check on where markets are as we start the week here. If we take a look at U.S. equity futures, marginally higher right now. As you can see, S&P futures up just over 0.1%. But we should remember this comes off the back of what was a pretty volatile week for global equities. Of course, many of the questions still around AI capex and how far that may go. So still waiting to see where that goes next. But what we saw from some of the major indices in the U.S. on Friday, closing in negative territory. And unlike previous AI-led sell-offs on Friday, we actually saw the weakness broadening out to some of the more, the larger tech names. So it's one to watch, especially as we get ahead and get going with earnings this week. Number of companies reporting earnings, including 2 of the Mag 7 companies that are due to report later this week. And especially, it's especially pertinent if we think about the news that we got over the weekend as far as what came from Moonshot as well as Alibaba's new AI model. So what does that mean for the future of AI spending and really where we're going from here? MSCI Asia Pacific Index marginally lower right now, a bit flat on the day, but still we're waiting to see how these developments play out throughout the week. We should note, though, that U.S. cash markets are closed for part of the day today due to a Japanese holiday. So we'll wait to see when the U.S. opens how the Treasury market is trading. Let's just bring you Brent crude. Of course, as we know, Brent crude in focus given the developments in the Middle East, jumping to its highest levels in a month. As you can see, Brent up more than 2.5% above the $90 point. And finally, gold marginally up now, up just over 0.2%. Let's just check in on how markets in Asia are faring, though. Winnie Xu is in Hong Kong for us with more. Winnie, what are you watching?
Yeah, good morning, Jen. Well, sentiment is quite fragile in Asia is probably the best way to put it. As you just mentioned, we have the overall regional benchmark here fluctuating quite a bit. Japan is on holiday today, but we have South Korea coming back from one on Friday. So a bit of a catch down there after that broad sell-off in the tech space on Friday. Now we are seeing gains in the Hang Seng tech sector specifically. So you can see that the big question investors are asking right now really is if the Chinese cheaper and more efficient AI models, the likes of the one from Moonshot, the Kimi K3, is going to raise further questions in terms of how these massive spendings of U.S. hyperscalers are justified or not, especially ahead of their earnings. So that is hurting the overall sentiment, while oil prices remain quite elevated amid the escalating tensions in the Middle East. Now you flip the board and take a closer look at the tech stocks in China, because leading gains today, we have Alibaba here up 5%, also on the back of that new model, which is said to be just second of Anthropic's Fable 5. So a lot of excitement in that area. While on the other hand, you have these independent AI labs, the likes of Zhipu and Minimax, really dragging here as the new AI models from the likes of Moonshot is raising the capability ceiling of the overall Chinese AI models and adding further pressure and further pressure on these competitors as well. Back to you, Jen.
Fascinating developments there. Winnie Xu in Hong Kong. Winnie, thanks. We'll check back in with you in a bit. Let's get back to our top story, though. The U.S. and Iran traded fresh attacks over the weekend, with Washington announcing a 3rd troop death in 2 days. Oil is higher on increased tensions in the Strait of Hormuz, with the IRGC Navy vowing not to allow any vessels to pass through without permission. Tehran says it will no longer adhere to the terms of the peace deal, while President Trump says the conflict is about ending Iran's nuclear ambitions.
This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they can have a nuclear missile.
Joining us now is Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, thanks for joining us. What exactly did we see in terms of the intensity of these strikes over the weekend?
Yeah, good morning, Jennifer. So, I mean, I think there were some important developments. First and foremost, you had these attacks on what can only be described as civilian infrastructure in places like Kuwait, so specifically the power plant, desalination plant. You know, that is a particularly concerning escalation in terms of what's going on the ground, because prior to that, they'd largely seemed to restrict each other to military targets. Now, that did happen as well, but that felt like a new departure there. Secondly, you had the death of US service personnel, both in Jordan and I believe in Kuwait. Again, that definitely ups the ante in terms of the escalation. Thirdly, you had what appeared to be an attack on Aqaba, which is right on that border with Israel. Now, Israel's largely kept itself out of this sort of most recent round of fighting, but that is quite alarming. If it strays into Israeli territory, they will presumably be obliged to respond, and then that drags them back into the conflict, which is something I don't think any of them want. So all of that, some slightly worrying developments as we go in. As you say, that's the 9th day, and clearly we're anticipating a 10th day with no clear exit ramp for either side.
And we're seeing oil reacting off the back of it, moving on that. What does this mean then, Stuart, for the Strait of Hormuz and, of course, oil flows, which investors have been watching quite closely?
Yeah, and there's been a very interesting shift in market sentiment. And you can look at a few things. So let's take a look at the prediction markets. You know, the odds, the prediction market was saying the odds of Hormuz returning to normal in terms of traffic by September the 1st was at 70% in mid-June. We're down to about 9%, 8%, something around there today. Basically a complete collapse in sentiment as this ceasefire has completely unraveled. And then secondarily, looking at the oil market itself, and you look at the forward curve, that is the cost of barrels going out months into the future, that has moved up right across the curve. So in other words, what that reflecting is sentiment right now. It's not really a prediction about future prices, but it reflects sentiment right now. Increasingly bearish, I think, about that supply coming back on with any sort of speed. And as a consequence, we're nowhere near the highs that we saw, say, in April or May, but we're definitely edging in that direction.
Yeah, and we see that reflected even today. Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, thanks so much for starting us off. Let's get some more insight now with Niamh McBurney, director at Control Risks, and continue the conversation. Niamh, thanks so much for being with us. So we just heard there from Stuart, it's seeming like sentiment has really dipped as far as where this conflict is. It seems like the U.S. and Iran back to an all-out war. How do you assess this current moment?
So I'd call this current moment restrained, calibrated, although Kuwait and Bahrain's experience over the last week certainly won't have felt like that. We should see the events of the last 10 days in particular, going back to the end of the week before, as both sides trying to pressure each other on the components of the MOU that they each see the other as not following through on. That boils down to Iran's perception that it should be able to control the Strait of Hormuz, and there are clauses within the MOU that allow that. And then also America's perception of what it thinks is acceptable Iranian action and how Iran is implementing the MOU. This certainly is an all-out war yet, and really both sides are, although they're incrementally intensifying their activities over the last several days, and the attacks on water and power plants in Kuwait really bear that through. They are still leaving space to come back to the negotiating table. I know it doesn't feel like that, but we are still some way from the kind of hostility that we saw during the first several days of March. But is it possible that we move towards that? Yes. And it's still very difficult to see what will be the prompt that causes both countries to agree that this round of jostling is over and that they will go back to the negotiating table. So we're probably set for another couple of days of what we've experienced over the last 9 nights.
Well, Niamh, how much of a concern is it that we're seeing troops being killed? We have the President of the United States making comments around that. Do you see that not potentially being a catalyst for more escalation, potentially ground troops?
So, I mean, the fatalities on both sides are incredibly unfortunate. It is a consequence of war. It is, I think, probably quite shocking to a number of Americans because there have been relatively few American fatalities during this conflict. So it is disappointing and is concerning. It reflects ultimately a failure of certain systems and the effectiveness of Iranian aggressive systems as well. But merely because there have been deaths doesn't mean this is a catalyst for a ground operation. We have seen fatalities earlier on in this conflict, and they were not the prompt for that either. Ultimately, President Trump is far less inclined to engage in a ground operation of whatever sort. There's a couple of different options he could choose from, whether it's just targeting the island or whether it's mainland Iran. But analysis that our teams have done, as well as many in the policy community have done over the last couple of months, have affirmed it would be an extremely risky endeavor. And we still ultimately think at Control Risks that President Trump is much more inclined to go back to the negotiating table, even at this stage, than to engage in a significant escalation, such as some sort of ground operation. Is it still possible? Yes, there are many, many options that we need to leave on the table. But right now, as of today, we still think he's inclined to negotiate rather than to escalate.
And Niamh, later this week, we'll see President Trump meeting with President Aoun from Lebanon. When you think about those negotiations or those discussions that are going to be happening, is there a likelihood that we could see potentially developments in some of the fighting that we're seeing in Lebanon from this meeting?
The ambition for the meeting between the presidents is that we see far less fighting and hostility in Lebanon ultimately, although not everyone in Lebanon's political sphere, including Hezbollah itself and parties affiliated with Hezbollah, kind of like the way this is going. But overall, this effort is an important signal that there has been a change in some of Lebanon's political parties, at least, that it would like to have a little bit more agency in managing the security environment. Although, let's be absolutely clear here that this is a US arbitrated arrangement between Lebanon and Israel, and the government ultimately has pretty limited room for maneuver here. It is possible that depending on how the meeting between the presidents goes and Iran's response, that we could see some activity from Hezbollah over the next couple of days, reflecting their unhappiness with these developments. But for now, the kind of Lebanon front has been relatively contained, and we still think it's the case that the President Trump would like to keep Lebanon at a much lower tempo, because he sees a lower level of kinetic activity as absolutely necessary to following through on this much more peaceful process, whatever Israel and the government and Benjamin Netanyahu feel about that. So that pressure from DC and the White House is actually very positive and integral to seeing a much lower level of activity and the progression of this more peaceful process over the next couple of days and weeks.
Niamh McBurney, Director at Control Risks. Always appreciate your insights. Thanks so much for joining us this morning. Still ahead, Natixis tells us why Asia is emerging as a region that is pulling significant capital flows, despite the deployment of capital remaining concentrated in key markets. More details up next. This is Bloomberg. Oil hit its highest level in more than a month, while bonds are falling as escalating U.S. and Iranian attacks renew inflation concerns. Treasury futures are also in focus, with trading in the cash market shut during Asian hours on Monday because of a holiday in Japan. Let's bring in Trinh Nguyen, senior economist for emerging Asia at Natixis. Trinh, thanks so much for joining us. I just want to start here because our MLive team has a really interesting article out now that talks about the volatility of Chinese bonds being at their lowest in a few years. What does that signal to you? Is it potentially that the bond market in China is less attractive to investors? How do you assess it?
Well, the bond market in China reflects the liquidity situation in China, which is quite flush. And the fact is that demand is very low, right? So if you look at the latest Q2 GDP, it's only 4.3%. And retail sales are barely growing on a nominal basis and negative on a real basis. Fixed asset investment is contracting at accelerating rate. So as a result, capital is deploying to the bond market. And as a result, rates are very low. Now, that has huge consequences. The one consequence is that there is capital outflows as domestic investors seek for higher return elsewhere, right? And so you see that as a pressure where the central bank will need to navigate between the two. One is appreciating the renminbi to attract flows because rates are low and earnings have been relatively disappointing compared to the U.S. or Korea, for example. But at the same time, exports are the key engine to growth. So in that perspective, you want to appreciate the currency, but not too much. And so it has to look for countries like Japan, where JPY is 162-ish level, despite of everything that the central bank has done, which means it is very competitive currency. And also the Korean won, which is also very competitive. So we see that appreciation pressure is there for the yuan, but it's going to be measured, and the central bank will make sure that it's not too excessive.
How severe, then, do you think it is for emerging Asian economies of capital flight, especially if you take a look at where the U.S. 30-year bond is? Is this a precarious moment at this point in time?
Absolutely. The good news is the U.S. economy is very strong. So that is very good for Asian exporters exporting to the U.S., which imports more than ever, particularly in the tech sector, particularly semiconductor. Now, the bad news is the fact that the U.S. economy is very strong. Inflationary pressures are very strong. Even withstanding the easing of gasoline prices, you can see that inflation remains very, very high. So as a result of that, rates market are reflecting that anxiety of supply shocks and demand in the U.S. and very strong indicator. So for emerging markets, they have to have attractive valuations to compete with U.S. earnings and U.S. nominal growth and U.S. rates, right? And some are standing up to that challenge, right? If you look at what India has done, it's throwing a lot at it. It hasn't raised rates yet, but it's really trying to attract investors through lowering taxation, expanding access to its bonds, and also lowering hedging costs. In Indonesia, which we have a meeting this week, they already raised rates by 100 basis points, and I think there is more to go. So it's pushing itself to now higher yielding. Obviously, it's competing with LATAM, which is even more higher yielding. So EM Asia is stepping up to this challenge, but it means it's facing a very, very challenging period where even as its domestic economy may be slowing, it will have to step up and answer to a very strong dollar, strong U.S. economy. Those that benefit more from exports are able to hike from a position of strength.
Trinh, what does the escalating tensions in the Middle East, though, mean for all of this potential here? I mean, Brent is over $90 at this point. Is this a risk to some of the growth potential you see?
Absolutely. It's a negative terms of trade shock. Obviously, the market's getting better at dealing this because it's able to suppress demand. It's able to offset it with other sources of supply. Regardless, even before the rise of Brent, we continue to see PPI very, very high in Asia. Now that translates to profit margins being squeezed, deterioration of purchasing power. Some of this is offset by subsidies within Asia. So you see some countries much more comfortable, like Japan or Korea, where they have subsidy thrown at the equation, where other countries it has to face with demand destruction. Now, that's a short-term shock. We see that this will eventually fade out. Now, bigger picture is that we do have very strong domestic demand in a lot of the countries, and they do offer diversification trades. These are economies that haven't benefited as much from the AI hardware boom, like India or Indonesia. But at the same time, they're stepping up to the challenge and doing some significant reforms, particularly India. So I do see that even with the shocks, long-term picture is that if countries are aggressive and they're willing to do more, investors will take notice at the right valuation.
Well, hopefully they took notice of what you just said there. Trinh Nguyen, senior economist, for emerging Asia at Natixis. Trinh, always great to get you on the show. Thanks so much. Still ahead this hour, Andy Burnham heads to Downing Street in what is set to be his first day as the UK's next Prime Minister. This is Bloomberg. Chinese startup Moonshot AI has told investors it plans to go public within 6 months after its latest model challenged perceptions of U.S. leadership in artificial intelligence. Bloomberg understands the company has officially distributed the shareholder resolution to its investors, seeking the blessing of its backers for a Hong Kong listing. The company is also wrapping a fundraising round that may value the 3-year-old startup at more than $30 billion. Meanwhile, shares of Alibaba rising in Hong Kong today after the company released a preview of its flagship AI model, saying it rivals top frontier models and trails only Anthropic's Fable 5. Developers can now access Nguyen 3.8 Max through Alibaba's coding platforms, including Coder. Alibaba plans to make the model open weight soon, expanding access beyond the preview release. And sources say the Trump administration is considering a new independent regulator to oversee AI safety. They say the proposal, developed with input from Treasury Secretary Scott Bessent, would create an agency that reports to the SEC and works with the industry on safety standards. The plan aims to appease both Wall Street and Silicon Valley companies by allowing them to play a larger role in jointly setting safety standards for AI. And coming up, investors will be watching as Middle Eastern banks deliver second quarter results amid challenges brought on by the escalating Iran war. We'll speak to Alvarez and Marsal's Sam Gidoomal next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Fresh strikes. The U.S.-Iran conflict deepens with the 9th straight night of retaliatory attacks after 3 American service members were killed over the past 2 days. Brent crude topped $90 on the unrest, climbing to its highest level in more than a month. Asia's AI trades remain mixed as traders digest news out of Alibaba and Moonshot after their latest AI releases. And it's a big week for bank earnings in the Middle East. We'll discuss how geopolitical risk and oil prices are reshaping the outlook. It's just gone 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Before we get to some of those stories, let's just take a look at where markets are starting off the week on this Monday. A bit of a mixed picture if you take a look at the board there. U.S. equity futures modestly higher, potentially recovering after what was a volatile week last week, of course, given some of the concerns still around AI capex and how far some of these companies may go. But what we saw on Friday was actually a broadening out of some of the weakness that we had seen with the AI sell-off, extending into some of the other tech names, which is why this earnings week, we have a number of companies reporting earnings throughout the week, including 2 of the Mag 7 companies. It will be key to parse through what we hear from these companies, considering the questions still swirling around. MSCI Asia Pacific Index tilting downward, down just over 0.1% there. And of course, we knew over the weekend we got a slew of news around AI models from Moonshot and Alibaba. So questions around still what the AI trade looks like moving forward. Elsewhere, we're watching Brent crude, of course, as the escalating tensions in the Middle East continue into a ninth day, as we just pointed out. Brent crude up just over 2.5%, its highest levels in a month, over that $90 a barrel mark. And gold, we also have on the board a touch higher there to trade at just over $4,000, $4,025. Now let's check in on how markets in Asia are faring. Winnie Xu is in Hong Kong standing by for us. Winnie, what are you watching?
Yeah, good morning, Jen. We are seeing Asian stocks under a bit more pressure today. Now, it is with the escalating tension in the Middle East driving oil prices higher, because those are also affecting how investors are now more concerned with inflation. We are seeing yields, for example, in New Zealand and also Australia higher, while Japan is on a holiday. Now, when it comes to the stock space, we are seeing South Korea's Kospi index leading declines here. A bit of a catch down as it just returned from holiday on Friday after that broad sell-off in the tech space on Friday. Now, the concern is still on how these massive spendings of U.S. hyperscalers, if they are justified with these new Chinese cheaper and more efficient models coming through. Now, overall, that is why we are seeing stocks in Hong Kong a bit stronger today. So we flip the board and take a closer look at those moves. In terms of the offshore stocks, we are seeing Alibaba here up 5%, leading gains in Hong Kong, and that is also coming after it had a preview of its new flagship Nguyen model, saying that it is just second to Anthropic's Fable 5. So that is really showing how the development in Chinese AI space is really advancing at a very fast pace. Now, when it comes to the onshore market, also some good news here. We are looking at the gauge up about 1.6% after the major state funds revealed that they are buying more of these Chinese equities. So it goes to show how Beijing is also becoming more supportive of stabilizing the market there. We are seeing the major stock here, Moutai here, up about 5.6% after the company also started raising prices for its flagship product. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong for us. Now, to the Middle East, investors will be watching closely as some of the Middle East's largest banks are set to report second quarter results this week. Geopolitical risk and oil prices are reshaping the GCC's investment and banking outlook, with Bloomberg Intelligence saying the Iran war is likely to weigh on FDI into next year. Joining me now is Sam Gidoomal, Managing Director and Middle East Head of Financial Services at Alvarez and Marsal. Sam, thanks so much for joining us. Let's just start here with your expectations for how the conflict in the Middle East may show up in some of these bank earnings throughout the week. What is it that you think we might hear from some of these institutions?
So good morning, Jen. Thanks for having me on the show. So, look, I think what we'll see is actually an extension of where things have been. The first quarter, really, of the year was characterized by ongoing strong growth, good asset quality, supported by strong capital buffers. I suspect what we'll see for this second quarter, which we've been watching out for, as you say, banks are reporting, is perhaps a slowdown in the level of credit growth. We still anticipate across corporate markets some growth in credit, but at a slower pace. I think the other step change has been some prudent provisioning that the banks have taken over this last quarter, obviously as a consequence of the conflict, and so as a result, cost of risk will have ticked up, I think, a little bit.
Given your background, Sam, in debt restructuring, is there any concerns around potential signs of stress or non-performing loans forming? What is it that your expectation is for the UAE banks? Let's just start there.
So look, for the UAE banks, first things first, the non-performing loan ratios are systemically very low and have been low for a while. And I think the sectors that you would expect to be impacted as a result of the conflict, specifically the likes of tourism, real estate, construction, manufacturing, and trade, obviously, which collectively account for about 40-45% of the asset base, we'll see a bit of stress, but there is we don't anticipate any systemic issues into the system. As I say, I think the banks are very resilient in the UAE, and so there might be pockets of stress, but nothing systemic.
How much is that a factor of what we've seen from the central bank then?
Well, look, the central banks put in place a series of measures, right? They took very progressive action at the start of the conflict. And the reality is actually we haven't seen, certainly the banks that we report on, kind of the top 10 banks in UAE by assets, availing of that program. It's been there as a standby if necessary. But as I say, because of the resilience of the banks and what they've gone into the conflict with in terms of their balance sheet strength and profitability, we haven't seen them having to avail of those measures. The fact that it exists is obviously helpful and continues to breed confidence.
Sam, let's just turn to Saudi Arabia because we do have 3 banks that are reporting this week. Is your expectation that we may see potentially some signs of the liquidity scarcity showing up in some of these results that we'll get? How much of a detriment do you think the kingdom is at this point as it pertains to the liquidity scarcity issue?
So look, the liquidity issue I think you're referencing is the fact that the LDR ratio is north of 100% at the moment in Saudi and has been. Interestingly, that actually came down as at the end of Q1 as credit growth as deposit growth outpaced credit growth. So and there is a heavy propensity for time deposits. So if you take those factors into account, I don't think there is going to be any marked liquidity squeeze, if you like. And I think a couple of factors to that. One, there's continuing retail deposit growth. 2, there's access to the capital markets, obviously, and really pricing and credit spreads haven't seen any significant kind of volatility around that. And 3, public sector deposits have and can be mobilized to weigh out any outflows, which, as I say, haven't been evident. And I don't expect that to be the case going forward.
All right. Quite a bit to pay attention to throughout the week. A number of banks reporting in the Middle East. Sam Gidoomal, thanks so much for giving us a bit of a preview ahead of that. Managing Director and Middle East Head of Financial Services at Alvarez and Marsal. Thanks so much for your time. For more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter. That's on Bloomberg.com. Now, TSMC will add $100 billion to its investments in Arizona to meet demand from U.S. customers and to ward off ambitious rivals. Its Vice President and CFO, Wendell Huang, spoke with our Chief North Asia correspondent, Stephen Angle, about the timeline of the build-out.
We are doing very well in Arizona. Our phase 1, using N4 technology, is up and running. The yield is very good, comparable to its mother fab in Taiwan. Okay. Phase 2, using N3 technology, tools will be moved in very soon. Phase 3 will be N2 technology. The construction has already started. Phase 4 of the wafer fab and the first phase of the advanced packaging fab, the preparation work have started. So we're making real progress, and we're very happy about the status in the Arizona. Now, at this time, we continue to see very strong demand from the customer, the multi-year structured demand. And our key customers in the US, these are the people that are using the advanced technology. And that's why we decided to add on to our already existing investment in Arizona to add another $100 billion. Now, the timing of ramping these new fabs will depend on the market conditions and customer need. Having said that, capacity is not born overnight. It takes 2 to 3 years to build a fab. It takes another 1 to 2 years to ramp it up. But we'll do it as soon as possible, as soon as we can.
How do you view the indigenous innovation growing in China? CXMT on the memory side is going to be listing soon. They're getting a lot of attention. Of course, SMIC is a smaller rival to you on the foundry side. And also, Huawei has been touting, their alternative to Moore's Law, and I think it's Tau principle, logic stacking and the like. What do you make of the innovations and the progress China has made?
Obviously, they're making good progress. But if you talk about competition, it's not just China. It's everywhere. We have a big competitor in South Korea. We have another one in the United States. These are formidable competitors. But we always have competitors. We know how to compete. So it goes back to the fundamentals of this industry: technology leadership, manufacturing excellence, and customers' trust. Plus, you have to have the service mentality. And then you need to be not competing with your customers. So if you put all these together, TSMC is always the first priority, first choice for our customer.
Given everything you've just said about your competitive advantage, how much does that give you a significant advantage over the rising competitors like Intel and also Terafab?
The overall strategy for us is that we have very strong conviction in this megatrend. And we're doing everything we can, wherever we can, to expand, to support the customers' growth, and also demonstrate that we do not intend to leave any food on the table to anybody else.
That was TSMC Senior Vice President and CFO Wendell Huang speaking with Bloomberg's Stephen Engel there. Now, coming up, the UK is set to usher in its 7th Prime Minister in just over a decade. We're live from London with what to expect when Andy Burnham takes the helm today. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Let's turn to the UK now. And Andy Burnham is set to become the country's 7th Prime Minister in just over a decade. The incoming leader will inherit a range of social and economic challenges as a number of questions about his cabinet and policy direction remain outstanding. Our Daybreak Europe anchor, Lizzie Burden, is now joining us from Downing Street. Lizzie, so this is familiar territory for the UK, but what can we expect today?
It is. That door behind me, Jen, feels like a revolving door at this point. It's today going to be Starmer out, Burnham in, and it has been an astounding journey for Burnham, the former mayor of Greater Manchester, now the Makerfield MP and leader of the Labour Party. Just to note, he is the first person to go straight from not in the House of Commons into Downing Street since Alec Douglas Home in 1963. He's the 11th of the past 19 British Prime Ministers to take office without an election. He is going to enjoy a sizable working majority of 166 MPs, and 90% of them actually backed him to be the Prime Minister. Now, today we're going to expect the choreography with which we've become all too familiar in recent years. Keir Starmer will be here to give his farewell speech before heading to Buckingham Palace to tender his resignation to King Charles. Then King Charles will ask Burnham to form a government, and then in brutally quick succession, Burnham will be back here with his own podium to set out his priorities, and ministers will start filing in for cabinet appointments. We'll find out who's made the team sheet, who hasn't, who might be becoming an enemy, and hopefully a bit of a steer on policy direction. But a lot of questions to be answered today.
Yeah, how much do we know about some of the policy direction, Lizzie, and of course, potentially who will be the next chancellor? I'm sure markets are keenly awaiting for some of that information.
Yeah, of course, the focus will be on the economic policy for our audience, at least. And Burnham is committed to the 2024 election manifesto in the sense that he won't pull the main levers of tax, income tax, national insurance and VAT. but that keeps him in a fiscal bind which his predecessors have found themselves in, and we're expecting him to be handed some forecasts today by Treasury officials that will look really bleak. Lower growth, higher inflation. They could say that the price of oil could go as high as $150 a barrel because of the escalating tensions between the US and Iran, and therefore higher interest rates. But then it leaves a question of what does the Chancellor do and who will that be, as you suggest. At the moment, the front runner is going to be Shabana Mahmood. The market's soothed by that it isn't going to be the Energy Secretary Ed Miliband. Of course, we still wait for confirmation. But Ed Miliband in our Markets Live Pulse survey was the least favoured candidate for the markets. He only got 5% popularity. Mahmood only got 11%, so actually not that much better.
Wow. We know that you'll be out there all day covering this for us. Thanks so much for getting up early, though. Lizzie Burden, our Daybreak Europe anchor there in Westminster. Thanks. Now, coming up, Ghana's government prepares its first sweeping overhaul of mining legislation in 2 decades. That story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Bloomberg understands that the Ghanaian government is preparing new rules to slash the length of time companies can operate mines without renewing their rights. The sweeping overhaul in legislation is the nation's first in 2 decades, and if approved, could stymie plans for some of the world's largest mining companies that operate in Ghana. Let's get more from Bloomberg's Echo Donto, who is in Accra and is joining us now. Echo, just start by, if you can, telling us more about these proposed laws and what they could do.
Thank you very much, Jennifer. Yes, indeed. Ghana was once named the Gold Coast by British colonial masters, and the country has since been a leading producer of gold and currently Africa's largest gold producer. But there has been a long-held perception that Ghana's mining laws gives away a large chunk of the proceeds of gold to foreign investors at the expense of the locals. And so on the back of that, when this administration took over in 2005 January, they came on the back of what they call a research agenda. And part of the research agenda was also to reform the mining laws such that in the end, Ghana will rake in better revenue than it's been doing before. And so that is what really led to. Mm-hmm.
So, Echo, then what's the concern then for companies like Goldfields and others that operate in the country? Potentially, it's beneficial for Ghana if these laws move forward, but what does it mean for some of the corporates?
What it means is that it affects investments in a way. For example, Goldfields' current mine in Tarkwa, one of the largest mines, the license expires in April next year. They have applied for an extension of 20 years to continue production, which also come with investment. But now with the new proposed laws, that extension is being cut to only 10 years, with even more stringent laws that will make it less profitable even for international such mines to operate on the field. Besides the point, there is also the bit where all mines must be contract mined by locals, which means that so long as it's an open pit, it is only a local miner who must mine on behalf of of a company like Goldfields. So when they are changing the laws now, they even change the tax regime. Now from an average of about 5%, now you're doing about 12% in terms of royalties and other taxes. So they install what they call a sliding scale, and that is what is being implemented. And all this means that even for investments, there's a bit of uncertainty. But then we still wait for the laws to be passed. It has been approved by cabinet, yet to be passed by parliament, which is a two-thirds majority held by this administration. So it looks like when this gets to parliament, passage will be a bit easy for the government.
All right. We'll wait to see how this develops. Bloomberg's Echo Donto joining us there in Accra. Echo, thanks so much for your reporting. Now, new U.S. and Congolese travel restrictions aimed at controlling the spread of Ebola are drawing warnings that the measures could undermine efforts to control the fastest growing outbreak of the virus on record. According to aid groups and outbreak responders, the new rules threaten to slow the deployment and rotation of doctors, nurses, and other specialists needed to contain the epidemic. Bloomberg has learned that Anglo American has selected a group led by De Beers' former boss, Gareth Penny, as the preferred bidder for its sale of the world's largest diamond mining company. The sale comes amid one of the diamond industry's deepest and longest downturns due to the rise in demand for synthetic stones and a decline in Chinese luxury spending. And perhaps the best story of the day, Spain are World Cup champions once again after defeating Argentina 1-0 in extra time, with substitute Ferran Torres scoring the decisive goal in extra time. Spain dominated possession as Argentina struggled to muster a meaningful attack in what could be Lionel Messi's last World Cup match, failing to register a shot on target across 120 minutes. Argentina also went down to 10 men near the end of regulation time, putting them at a major disadvantage against Spain. Now, let's just check in quickly on markets. As we know, it's a bit of green on the screen right now for U.S. equities, perhaps a bit of a stabilization after last week's sell-off, but still many earnings reports coming out this week, so plenty to watch out for. That's it for Horizons Middle East and Africa. Lizzie Burden is live from Downing Street for Daybreak Europe. This is Bloomberg.